Thursday, February 16th, 2023, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at a very important question that many of you have and has been asked many times in the past. And that's whether the government can come after your gold and your silver as well. So we're going to focus on the UK and a little bit on the US as well. I think the UK is an interesting situation. Before I do that, I'd like to let you know that I did an interview with London Paul from the Serious Report. I published it last night, and it's about the BOJ and also the whole financial system, how everything is so crazy. I highly recommend it. It's an hour long, but I think Paul is a great analyst, not just economic, but geopolitic analyst. Yesterday, though, we just focused on the economics and the markets, and he has some really interesting information about the JGB market, which I thought was quite outrageous. So I'm going to put it up in the cards, a link to it, and also below in the description if you haven't seen the interview yet. So of course, as we have seen in the last 3 years, anything is possible. The globalists, in my opinion, the people in charge, because yes, there are people in charge behind the scenes, in my opinion. We are told that we have democratic and representative government, but I beg to differ. Yes, they could do anything. They could come after anything you have, really. All they need to do is give a good excuse, and the general public will accept it, some kind of threat. So yes, they could come after your gold and silver. My view has been, though, that the way the gold and silver market are kind of managed, or if you want to call it manipulated, it puts a lot of people off from actually acquiring physical gold and silver. And why is that? Well, because of the volatility. That's how they do it. And one might say, well, if they manipulated the market, how come gold has gone from $35 to like $2,000 recently? Well, yeah, it's all to do with the volatility. It scares people off. I have had many people in the past ask me, yeah, should I buy gold? And I would say, yes, it's a very good long-term insurance. It's a very good, yeah, it's been around for thousands of years, and it maintains its value, unlike our currencies. And then the answer I get, yeah, but it's too volatile, it's too risky. And they don't understand the part that it doesn't have any counterparty risk. But I would say case in point has been the last few weeks, where gold had been gradually trading higher. It wasn't anything special. It was just like moving up and up in dollars and in sterling, in euros, and then all of a sudden it turned around, lost $100 in a day, and it's been hammered quite sharply, and that puts people off. And why would the powers that be, the bullion banks, the central banks, and the treasuries of the world want to do that, especially the US and the UK? Well, because they're fighting a battle to keep people in this fiat currency system, because they basically lost control of inflation, and they can't really afford to raise rates too much. So they have to tinker with the CPI data. They have to intervene in the bond market, like you will listen Paul talk about in my interview from yesterday. They will intervene in the gold market. And how do they do that? Well, the Bank of England holds about 5,000 tons. Of course, only 300 of those are really UK reserves. But what they will do is they will lease a lot of that gold out to the bullion banks. And many times over, they rehypothecate. So they will go into the LBMA, to the paper market, and because it's traded like a foreign exchange, and they'll sell many, many tons. That gold, of course, will never change hands, and that affects the futures price and everything, and that's how they do it. So some who have been buying gold 3 weeks ago is now not very happy because he or she has seen gold drop very sharply. So why am I going over this? We're supposed to talk about gold confiscation. Well, because I think that's how they discourage people from having gold. And in the UK, we're going to look, though, at when there were controls and how much gold people could have, that it actually came out at something different. But generally, that's why they would want your gold and silver, is if they had to do some kind of rearrangement or reset of the whole system. They wouldn't want you holding a lot of the gold. They would want the governments holding a lot of gold. And that's what happened in 1933 in the United States with the Executive Order 6102, which was signed by FDR, of course, on April 5th, 1933. So it made the ownership of bullion or monetary gold illegal. And it said that you had to hand in your gold over a certain amount to your local Federal Reserve branch. And I think it worked well for the government, not very well for the people who handed it in. I don't think people handed all their gold in. I think SD Bullion has done an interesting video about that. I think a quarter of all the gold was handed in. And what that allowed the U.S. government to do, once they suspended this gold standard domestically, was on January of 1934 to revalue the price of gold from $20.67 an ounce, the troy ounce, to 35. And that gave them a huge profit. That increased their gold reserves, the value of their gold reserves. And actually that led to a boom in mining as well, because it became very profitable for mining companies. Of course, I'm not saying that you should go out and buy miners right now, but that could be one of the consequences of it. So that happened in the US, and that was the law for like 42 years, because in January 1st, 1975, Americans could own gold again. And the Treasury and the State Department were actually in contact with the bullion market in London because they were concerned that Americans would start buying a lot of physical gold. And in this WikiLeaks document here, it even says that the futures market should create a lot of volatility in the market and discourage people from actually hoarding too much gold. So they even mentioned that in that document. It was communications between, I think, the State Department and the bullion dealers in London and the US Treasury, as you can see here. So silver, of course, in the US has never been confiscated, but in the UK it's slightly different. And I'm gonna reference a book that I bought many years ago, and I bought it, I think, from Peter Morris in Bromley, Coins and Metals dealer. The Sovereign, the world's most famous coin, a history and price guide. So there you go. I found it. You can get this on Amazon. I think it goes for £28, as you can see. So you can buy this book. It's a really good book. It's all about the history of the sovereign. And it also has a list of all the sovereigns that have been minted. I guess it's not up to date. As you can see here, for example, they give you all the dates and all the ones that are rare and that are worth more. And these are old prices, but you can see which ones are worth more because of the prices. Yeah, so I think, let's see what year it goes to. 2000s. But it's a very, very interesting book. And I've referenced this book because they talk about controls that they've had on gold. So here on page 46, they talk about the end of the gold standard in 1914 and how the European countries and the UK try to keep some kind of semblance of a gold standard from the end of World War I up until 1931, when the UK actually suspended the gold standard, apparently temporarily. That's what they say they did. But eventually they gave up on it, on the gold standard. And throughout this period, though, it was free to buy and sell sovereigns commercially. And the sovereign, of course, remains legal tender, and it is still today. And what was happening in the 50s and 60s, though, was that you could get a lot more for your gold in countries like France and other countries in Europe. So people would export their gold sovereigns to get more. So the government passed the Exchange Control Act. So this was nothing about stopping people buying sovereigns in the UK, but stopping them from exporting. Because it says here, for example, in 1947, the sovereign at home was worth about 50 shillings. But on the French black market, it traded at 100 shillings. And the following year, it actually rose as high as 128 shillings. So why was that discrepancy? Well, I think it's because the UK gold market was being kept artificially low, the price, and in France they had a black market. So that's why they put the Exchange Control Act. And then they talk about a metal or a gold coin craze that happened in the 60s when a Pacific Polynesian kingdom of Tonga started issuing gold coins for circulation, and they became very popular, and people started buying coins from abroad. They also talk about also the Isle of Man was doing that, and then that led to a craze in collecting these coins from abroad. And the Labour government in 1966 didn't like that because a lot of the capital was flowing abroad, a lot of sterling, and they had a lot of exchange controls back then. So that was the reason why they put the Exchange Control Order. This is different from the Exchange Control Act, which was for exports. So what I'm going to do now is go through this and then give you my conclusion whether this could happen again, seeing that there is a possibility we could have a new Labour government. And it seems like it's always the Labour government that put these restrictions, not the Conservatives. They've come in the past and lifted them. So it says here, the issue of sets of gold medals proliferated and culminated with the launch of an ambitious series planned in 1966 to portray the prime ministers of Britain since Walpole. Yeah, this is the issue of all these foreign collectors of medals and coins. Suddenly, the Labour government pricked the gold bubble by introducing the Exchange Control Gold Coins Exemption Order 1966. The object of the order, which came into effect on 27th of April of that year, was to prevent the loss of currency reserves caused by the import of gold coins and metals from abroad, and to eliminate the hoarding of gold by speculators, as opposed to genuine coin collectors, who nevertheless were now to be subject to strict control. So up until 1966, there wasn't a problem. Buying, selling gold in the UK, of course, unless you exported it. So I'm going to skip the whole thing. It gives you the important part here and go to this part here. It says, a few collectors were caught breaking the law and prosecuted, their collections being confiscated. Undoubtedly, many more flouted the law and continued to hold on to their hoard of sovereigns without being able to buy or sell further. So what that meant is that, yes, they didn't come after your sovereigns, but if you sold them officially and you sold a lot more than you should have had, you would have been in trouble because of this exchange control order. The main effect of this piece of legislation was to undermine the position of London as the center of the world coin market. Gold trading fled abroad and flourished as never before in European countries, free from such restrictions to the detriment of the traditional British market. And it says, sanity returned to the sovereign market in 1973 when the Conservative government rescinded the 1966 order. For a short time, collectors were allowed to buy and sell gold coins at will. 1974, however, following the return of the Labour government, a modified version of the order was reimposed. This too was abolished after Conservatives were returned to power in 1979. So there you go. That's what really happened in the UK. So what about silver? I forgot to talk about silver because it was also affected by this exchange control order. So it says here, furthermore, holdings of silver coins minted after 1919, between 1816 and 1819 and before 1816, as well as base metals before 1860, had to be disclosed. The object was apparently to prove to the satisfaction of the Treasury the genuineness of a collector's numismatic interests. But the very bureaucracy and official prying into the affairs of the private individual was regarded as sinister, and many gave up collecting sovereigns at this time rather than submit to such inquisition. So they included the silver as well. I don't think they're competent enough to police everyone, all the stackers in the UK. How likely do I think they are to impose these orders and controls again? But I don't think it should stop you. At least it hasn't stopped me from trying to protect my savings. If I had always worried about confiscation, I would have never had started acquiring gold and silver back in 2002. But as I've said before, anything's possible. So with that, let's quickly look at where the markets are this morning. It's 8:38 a.m. London time. We've got spot gold at 1840. That's up about $4. High's been 45, and the low's been just above 30. It's been 1831. Silver's up 4 cents at 21.65. High's been 83. The low is 57. The stock market indices are virtually unchanged, so I won't go through them. To the currencies, sterling is up about 0.1% at 120.50. The euro is up 0.2 at 107.08. The dollar is down 0.25% versus the yen at 133.82. And the dollar is unchanged versus the yuan at 686.30. Aussie dollar is up 0.25%, 69.20. The dollar is down 0.125% versus the Canadian dollar at 133.76. And the Kiwi dollar is up 0.25% at 62.95. To the general commodities, platinum is unchanged, trading around 920. WTI crude is up 0.4 at 79.08. Brent is up 0.25% at 85.33. High-grade copper is up 1.4% at 4.08. We're going to finish with the bond markets. We're going to finish with the bond markets. We're going to check the U.S. Treasury market, the 10-year yield is down 2 basis points at 378. We're going to check the gilt market, which kind of had a relief rally yesterday. I told you that I thought that the yields would pick up again by the end of the day. They did pick up a bit. Right now, the 2-year is unchanged at 3.76. I think we went down to 366 yesterday. Recently, I think back on Tuesday, it made a high above 380. So not out of the woods yet, the gilt market. The 10-year is up 2 basis points at 350, and the 30-year is up 3 as well at 390. Japanese market still fairly steady. They're capping that 10-year yield at 0.5 right now. I think the last traded was 0.497 and the high has been 0.502. So with that, I'm going to wish you all a very good day. Take care. Bye.